Hello everyone and welcome back to my channel. I hope all of you are keeping safe. Today we are going to discuss about the change in the VAT rate in the Kingdom of Saudi Arabia. So before getting started, let's look into the contents of this video. Contents include the introduction, reason for increase in VAT rate, the impact of increased VAT rate in the businesses, transitional provisions, and conclusion. The Kingdom of Saudi Arabia has increased the VAT rate from 5% to 15% with effect from 1 July 2020. This announcement was made on 11 May 2020, and hence the key date is considered to be the date on which the announcement of increased tax rate was made, that is 11 May 2020. Further to the announcement of the increase of the VAT rate from 5% to 15% that will take effect from 1st July 2020, the General Authority of Zakat and Tax (GAST) has published a guideline in Arabic providing examples of how its transitional rules will apply to the VAT rate change in KSA. And like I mentioned before, I will be taking you through the transitional provision in detail in this video. Now let's see the reason for the increase in VAT rate. The tripling of the VAT rate is intended to address the fiscal imbalance caused by the decrease in consumer spending, the loss of oil and tax revenues, and the cost of healthcare initiatives put into place in response to the COVID-19 pandemic. So now let's see how the increase in VAT rate is going to impact the businesses. In addition to the increased VAT rate, the businesses in KSA should expect an increased level of scrutiny from the GAST as VAT becomes a more important source of revenue. Businesses whose sales are partially or fully VAT exempt will experience an increase in costs as a direct effect of the rate increase. The rate increase will impact all industry sectors in the KSA, although it is the consumers who will be finally bearing it. Over the next few weeks, taxpayers will want to review existing contracts that provide for continuous or periodic supply of goods or services and consider the required documentation changes that should be effected before 1st July 2020. The rate increase will also impact cash flows for businesses due to the timing difference between the payment and the recovery of VAT. Similarly, businesses should review their internal systems and processes to reflect the increased VAT rate. So now let's look into the transitional provisions. The guideline issued by the GAST summarizes the transitional rules governing the impact of the VAT rate increases on the following. First one, the contracts signed before the announcement of the VAT rate increase. Second one, the contracts signed after the announcement of the VAT rate increased. And the third one, tax invoices relating to the supplies taking place before and after the VAT rate increase. So now let's look into the transitional provisions in detail. Let's take a scenario where the contract is between a VAT registered supplier and a government body, and the contract is entered before 11th May 2020. In this case, the supplier will be subject to 5% VAT until the earlier of the following, that is the time the contract is expired, the time the contract is renewed, or 30th June 2021. So in the same case, for example, the contract is between the VAT registered supplier and a government body, but the contract is entered between 11 May 2020 and 30 June 2020. 5% VAT will apply only if the supply was delivered before 30 June 2020, which means if the supply is delivered after 30 June 2020, then 15% VAT rate will be applicable for that particular supplies. Now let's take another scenario where the contracts are entered between two VAT registered businesses. In this case, if the contracts are entered before 11 May 2020 and the supplies are continuous until after 1 July 2020, then the supply will be treated as subject to 5% VAT until the earlier of the following, that is, the time the contract is expired or the time the contract is renewed or 30th June 2021. For example, in another case, if the contract is entered between 11 May 2020 and 30 June 2020, then 5% VAT will be applicable to that supply if the supply is delivered before 30 June 2020. But if the supply is delivered after 30 June 2020, then 15% VAT should apply for that particular supply. Now let's see the cases where tax invoices are issued. For example, the tax invoices are issued before 11 May 2020, which relates to a supply delivered on or after 1st July 2020. In that case, the supply may be treated as subject to 5% VAT provided that the supply will be delivered before the end of 30 June 2021. And if the tax invoices are issued between 11 May 2020 and 30 June 2020, that is, which means the invoices are issued after the announcement date, then 5% VAT should apply where the supply will be delivered by 30 June 2020. If the supply is delivered after 30 June 2020 for those tax invoices which are issued between 11 May 2020 and 30 June 2020, then the increased rate of 15% VAT should apply for that particular supply. And I hope the transitional provision is clear for you. As a VAT change is fast approaching, we recommend all the businesses to start the process of reviewing the contracts and tax invoices in order to assess and properly address the VAT impacts.